Good morning, everyone. I'm Wes Burke with Central Coast Lending. Here's the Mortgage Market Desk briefing for Monday, August 24th. And today's headline is pretty simple. Bonds are getting a little relief, MBS are participating, but this is probably not the week to get overly comfortable floating. Let's go inside the numbers.
Early this morning, the 10-year Treasury is around 4.71%, the 30-year is around 5.24%, and UMBS 5.5 coupons are near 99.23, up about a tenth of a point on Mortgage News Daily's early screen. That's constructive. The important part for mortgage people is that MBS are actually participating in the Treasury rally. We're not looking at a situation where Treasuries are improving and mortgages are sitting there with their arms crossed. A lot of this morning's help is coming from oil. Crude is down roughly 2% as markets wait for Treasury Secretary Scott Bessent to outline new sanctions on Iran. That is good for bonds right up until it isn't. Lower oil takes some inflation pressure out of the market. But anything that puts Iranian supply or shipping through the Strait of Hormuz back at risk can reverse that trade very quickly. I would call today's move constructive but headline dependent. Here's the inside baseball number I think is more interesting. Optimal Blue says that in July, UM30 5.5 coupons represented 67% of lender hedges, even though only about 35% of production was landing in that coupon. So when you want to know what capital markets desks care about this morning, keep an eye on that 5.5. Execution has actually shown a little improvement underneath the surface. Optimal Blue says conventional 30-year best efforts to mandatory spreads narrowed to about 30 basis points, with government execution spreads around 16. That doesn't mean every lender immediately passes this morning's MBS gain to the borrower, but secondary execution is worth watching just as closely as the 10-year. On the consumer side, the latest readings are 6.77% from Mortgage News Daily, 6.65% from Freddie Mac, and 6.77% from MBA. Different surveys, different methodologies, so don't compare those as though they're three rate sheets sitting next to each other. Using the MND number and today's 10-year gives us a rough mortgage to treasury spread of about 206 basis points. An important disclaimer, that is not MBS option adjusted spread. OAS accounts for the mortgage borrower's prepayment option and depends on the model being used. It is a different animal. Here's why I would not get too cute with a short-term float. Tomorrow we get July new home sales and a 2-year treasury auction. Wednesday is the big one. Second quarter GDP revision, July PCE inflation, and durable goods all hit in the morning, plus the 5-year treasury auction. Thursday, Jackson Hole gets underway and we get the 7-year auction. Then Friday at 10 Eastern, Fed Chair Kevin Warsh gives his Jackson Hole keynote, and Michigan releases final consumer sentiment at the same time. That is plenty of ammunition for a volatile mortgage week. Borrowers remain very rate sensitive. MBA says overall applications slipped 0.4% last week. Purchase apps fell 2%, although refinances managed a 2% increase. Optimal Blue's July lock data tells the same story from another angle. Total locks fell 11% from June, although they were still 5% higher than a year ago. Purchase business remains the center of gravity at more than 81% of total locks. So here's today's LO playbook. For loans closing inside 2 weeks, I would lean toward using improvement rather than gambling through this week's event calendar. For longer locks, controlled floating can make sense, but have a target, watch the 5.5 coupon, and know exactly where your borrower becomes happy. And most importantly, use a better bond morning as a reason to make phone calls, not as a reason to predict rates. Call the buyer who stopped looking. Rerun the payment. Update the pre-approval. Call the realtor whose buyer thought 6 3/4 was the end of the world. The market does not have to fall 50 basis points to create an opportunity. Sometimes 10 or 15 basis points paired with the right structure is enough to restart a conversation. Bottom line this morning, treasuries are better. MBS are participating. Oil is helping. But Wednesday's inflation data and Friday's Fed speech are sitting directly in front of us. Today looks like an execution day, not a prediction day. One more thing before I go. If you're a producing loan officer, we're building something you'll want to hear about. It's a structured, compliant office access platform that puts the right loan officers inside select real estate brokerages on a published schedule with the brokerage's blessing. You bring the relationships. Central Coast Lending brings the banking platform, the compliance structure, and a formal way to deepen what you already have. If you're tired of being told to go build realtor relationships from scratch and you want a program that formalizes what you already have with a local mortgage bank behind you, give me a call. Let's talk.